Well, a lot's happened since the last time we were here to look at the semiconductor and semiconductor equipment industry. Things have gotten really hot, so we're going to be looking at that. I've got Andrea Lati with me again, who is VLSI's chief forecaster, and we're going to be going over this. So, Andrea, welcome to the program.
It's good to be back, and it's good to be finally talking about something positive.
Yeah, I mean, it's been 2 years, right, where we started warning about electronics last year and everything.
Yes, and the second quarter actually has turned out to be a little bit better than we expected, which is really a pretty nice positive step, considering how lousy first quarter was. And it's been actually across the board for both semiconductors and also semiconductor equipment.
Yeah, so when I've looked at it, some of the data that we've got on our weekly data shows that the third quarter is actually coming in really positive. The nowcast is showing the quarter at about 4% growth
Yes, this is for ICs.
for ICs,
Yes,
and then the in the second quarter it was down 2% year over year, but it was positive sequentially, right?
correct.
And it looks like the first quarter was really the bottom of this cycle.
It seems like, and the reason why I liked what happened in the second quarter was because we were expecting for ICs to increase sequentially about 3.7%, and it's coming to about 4.5%. So definitely there is some positive momentum building up there, and more importantly, the trends and the indicators that we look on weekly basis are turning positive, which really are promising for a nice rebound in the second half of the year.
Yeah, certainly the weather report for semiconductors and ICs has been really positive. And the other interesting thing to me is the supply demand
Hmm.
situation has really gone to favor shortages.
Correct.
And last year we were looking at saturated glut levels through almost all the product categories. As we got into the fourth quarter, it was really ugly, and then it started to ease up in the first quarter. Now it's looking pretty good so far in the third quarter. We just released a nowcast for supply demand, and it's showing it at a shortage. So what sort of thing have you seeing in the weather for the equipment? Because it should be good for equipment.
Yeah, the equipment actually, it's been, I mean, since the beginning of the year, actually, the activity started picking up. It was first led by the memory, all these conversions that were taking place in the NAND, 3D NAND. And right now, memory has slowed a little bit, but foundries are picking up the slack as they start building up their ramp for the 10 nanometer, which will really be a 2017 story. However, most of these orders are coming in now and actually are really giving the whole industry a nice boost in the second half of the year. And in the IC side, we also saw the CPPI actually bottoming at the end of May, and then from June until now, actually, it's been on an uptrend, which is actually a very strong sign for the overall fundamentals in the IC market. So we're
Right.
definitely seeing much tighter conditions there, which are helping, chip makers with pricing, but also they are bringing a little bit more confidence to chip makers to continue spending, especially in
Hmm.
memory and also logic.
Yeah, the for the viewers, the chip price performance index, CPPI as he called it, is a measure of what's happening in the pricing of each transistor as opposed to Moore's law, which is the cost per transistor. So whenever it's really positive and it looks good, it means that the industry is moving towards greater profitability, right?
Correct. That is correct.
And so that's some of the.
That has been turning in a positive trend, as I said, for the last since June actually,
Mhm.
and it's looking pretty strong right now.
Right, right. Well, we'd actually said in July in semiconductor analytics that the industry had gone into an upturn, that it has switched.
Yes, and the we have actually, and it's just that the whole year, when you look at on annual basis, is this will probably be sort of probably a 0% growth for ICs.
Yeah,
But the thing is that we're starting off a pretty deep bottom, right? So even though we're climbing out of the bottom, we're still in downturn territory,
right.
or at least we were in the second quarter. So it still didn't feel like a huge upturn. But if you look at the trajectory, we actually started pulling out of this bottom, and for ICs will be in positive territory if you compare it on yearly basis in Q3 and Q4. And for equipment, actually, Q2 was higher than Q2 of 2015, so it already took place last quarter. So the equipment sort of was a step ahead, and
Right, it's a lot like 2009, where the V in the downturn came right between the fourth and the first quarter. So 2009 looked really terrible.
Correct.
When in fact the upturn had already started by February, and it was pretty
correct.
definable by the April-March time frame. If you waited till 2010, you lost the whole momentum play.
Correct, and it's a similar story this year actually, and another thing to take note, especially for the equipment market, is that if you look at the spending weights, right? As I said, that it was memory led in the first half. If you look at the biggest suppliers, the biggest spenders, primarily TSMC and Samsung, they only spend about 30% of their capex in the first half, and they are not planning to change their capex. Actually, TSMC upped their capex by about $500 million. So there is quite a bit of weight, about 60% or almost 70% in the second half, which is really going to be, driving this whole equipment market. And for the equipment market, we are now expecting a positive year with the growth coming at about 1 to 2%,
Right.
versus a 4% decline that we have in our previous update. So
Which tells you it's a big surprise too
Correct.
to the chip guys, because they really need the capacity to be coming online in the first half so that they can produce the products for the second half. So the fact that they're upping now tells you that they've been caught a little behind and are racing to catch up if they're investing in the third quarter. The other key indicator that we have there is our guys in Europe that do critical subsystems. They came out with a really bullish forecast. So if the equipment guys are ordering the subsystems, it tells you the equipment guys are really putting their money where their mouth is. You've got the chip guys putting their money where their mouth is by upping their capex. So it's really looking good for next year, right?
yes, and next year actually we're predicting the equipment market to grow by another 7 to 8%, and the drivers will be the same. It's going to be the 10 nanometer ramp and probably also some 7 nanometer capacity being brought in, and also the 3D NAND, which basically there will be this continuous conversion from planar to 3D. And I believe also we'll probably see some recovery in DRAM, which has been really depressed this year, but pricing there is improving. And once we see shortages there, what happens next, right? So
Right.
we will probably see some more positive momentum there as well. So overall, I
Great.
think it's looking better for 2017.
Okay, fantastic. Thanks. I think we'll wrap it up here.
Okay.